Sikka has delivered, and how. Just as he completes his first year in office, Infosys has come up with a power-packed performance, its best show in almost 5 years. India's second largest IT company posted a 4.5% rise in first quarter revenue, well above what the street was expecting. Even margins came in at a healthy 24% despite high visa and wage costs. But what won investors' heart is the constant currency revenue guidance for the full year, which has been retained at 10 to 12%.
Investors cheered as Infy got its mojo back. The stock zoomed 11.5%, even as the Sensex plunged almost 240 points. Interestingly, Infy today jumped 2 places in the market cap rankings to become India's 5th most valuable company. In an exclusive chat with ET Now, Sikka said the confidence has come back both for employees and investors. Infy's street-beating performance and what it means to other IT companies. That's our top story on Business Tonight.
Vishal Sikka couldn't have asked for a better anniversary gift. Nearly a year after taking charge as Infosys CEO, the software major posted first quarter results that came above street expectations. A pleasant surprise after TCS's disappointing numbers last week. While investors gave the Infosys stock a huge thumbs up, Sikka too was optimistic about the road ahead in terms of volume and demand.
Widespread adoption of innovation and of new technologies that is starting to show results now, both innovation at the grassroots level as well as the breakthrough innovation that we have been working on. And I feel good about these results giving us good momentum as we go into the rest of the year. We are confident in our ability to achieve our guidance of 10 to 12% in constant currency.
For the first quarter ended June, Infosys posted revenue of $2.256 billion, up by 4.5% sequentially compared to the ET Now poll of $2.224 billion. EBIT margins came in at 24% due to the impact of visa cost and wage hike. While Infosys retained its annual revenue guidance in constant currency at 10 to 12%, it raised this to 7.2 to 9.2% in dollar terms.
The yield has started coming down, the interest rates have fallen and they are expected to fall further. So you would see the interest income started coming down over the quarters. Also the exchange gain, last quarter we had about $23 million of exchange gain. This quarter it's lower, it's a loss of $3 million.
From a sector perspective, I think BFS had a very good growth this quarter. Insurance was a little bit of a laggard because we had a couple of client ramp downs, but otherwise if you ignore insurance, the BFS had a good growth.
Infy's results in a challenging environment has raised confidence among investors, but a lot depends on whether they will be able to sustain the momentum going forward, considering the second half is usually weaker than the first for the company. While Infy's guidance of 10 to 12% was treated with skepticism in the beginning of the year, there is a lot more conviction now that Infosys will deliver on that number and will be on course to regain industry-level growth in the next financial year. Perhaps that will be the perfect gift for Sikka when he clocks 2 years as Infosys CEO. With Rahul Daima, Chandra Ashrikant, ET Now, Bangalore.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.